And if you see over here, the peak in 2021 was about 127,000 sales for the year. We are not even going to be half of that based on projection. It's really bad. And to also understand just how severe of a drop off it has been in the last 3-4 years, in 2017, when we peaked, which was a crazy market in GTA, we went down almost to the historic average with the 90s involved. Now we have dropped from the peak all the way down by more than half the sales we had from the peak. It is crazy. We just got the latest report on the housing market, and it pretty much confirms what we have been talking about here on the channel. The housing market is completely dead as sales continue to collapse. And let's not forget this. Spring is supposed to be the busy time of the year for real estate. So let's jump right into the data to see everything that's going wrong. Hi, my name is Zen. If you enjoy my data-driven and number crunching real estate updates, be sure to like and subscribe. So you can see, as with the latest numbers that have come up, sales are down, prices are up. But let me explain to you why sales are so low and just how low are they actually. So right now, the chart you're looking in front of you right now is the number of sales from the start of each and every single year, dating all the way back to 1989, as long as I can pull the data, to the end of May. That's the latest subset of data. And how many sales we have in that 1 year for the first effectively 5 months of the year. You can see over here, the orange line right here is the average where we have about 31,000 sales. Last year, as a reference point, which was already a very bad year, we had 30,000. So it's just a little bit below average. Right now, we're at 24,000. That's how bad it is. So for us to go to 24,000, we have to effectively go, let's say, all the way back to the 1990s, 97. And you know what's a big thing that has changed from 97 in Toronto real estate? The population size. That is just how bad and how little sales we had. So because of the smaller amount of sales, you can understand that each sale has a larger contribution to the average. And that's why prices have gone up, and you'll see shortly. Now, if I were to project the amount of sales onto the end of the year and see how many sales we will normally get, you can see that last year we hit 70,000, which is below the average historically, which includes the 90s when it was very low, and that's a 75,000 number. Right now, we're projected to hit 57,000 sales. That is anemic. Again, we have to go back into the 90s when the population was much smaller. And if you think about it in this sense, it's crazy how little sales we have when we just had two of the worst 2 years we've had in 23 and 24 because of the interest rates. And now as interest rates are actually getting better and they're getting lower, prices are actually down, we have even less sales. And that's because of the uncertainty in the market. So you can call that the trade wars, the unemployment, the recession that's looming. There's a lot of negative news that is causing a lot of uncertainty for people to not make large purchase decisions. And that makes a lot of sense why we have so little sales. And if you see over here, the peak in 2021 was about 127,000 sales for the year. We are not even going to be half of that based on projection. It's really bad. And to also understand just how severe of a drop off it has been in the last 3-4 years, in 2017, when we peaked, which was a crazy market in GTA, we went down almost to the historic average with the 90s involved. Now we have dropped from the peak all the way down by more than half the sales we had from the peak. It is crazy. Now this chart over here looks similar, but it's a percentage of transactions based on the population of Greater Toronto area. So as you know, the Greater Toronto population has increased over time. And I just take the number of sales, divide it by the amount of people, and that gets you a percentage. So historically speaking, you can see that about a little bit less than 1.5% of the population, which is this line over here, would transact every single year. And you can see in the crash of the 90s, you can see that we were just at about 1%, call it on average. The major dip was in 89 over here. And you can see that right now, we are projected to have 0.9% of the population transact. That is 20% less than this and almost 60% less than the historic average. That is how little sales there are right now. And people will have to move. The thing that I'm still trying to get information around is just how many as a percentage of the sales in this chunk up here as a percentage of the population were because of investors versus end users. And I know there is some pent up demand right now where the end users are just putting their move decisions on pause until they're a little bit more certain about where the economy is going to be. But will the investors come back? And just how many investors there were in this kind of segment of the years when we had above average sales, that's an answer I do not have right now. And I'm trying to get to the bottom of that. So you can see, yes, there is going to be some pent up demand for sure. There is going to be a bounce up, but I do not think we're going to bounce back up to call it even the average. Maybe we get to better than last year, or maybe a little bit better than the previous year. But I do not think we're going to be anywhere above the average that we've had historically. That's just the sentiment I have right now. Quick sidebar, if you're buying but not sure where to start or what's even a good deal, just hit the link in the description below. Tell me what you're looking at and I'll break it all down for you. No fluff, no BS, just real talk from a human and not just another chatbot. And if, let's say, we were to repeat what happened in the 90s, you can see that the percentage of people buying properties didn't return to the average up until 2000. So this is what I'm saying. This has been almost a whole decade where sales have been trading below the average. And can we see that in the 20s? Potentially, because things are very volatile right now. So we don't know what to expect. But if we were to look at history to see if it's going to rhyme, then yeah, I would not be surprised if we don't go above this orange line until maybe like say 2030. Do keep in mind though, we are now more than halfway through the decade, which is crazy if you think about it. Now this chart I revamped so that it helps everyone watching this video understand just how every segment of the market is operating in a different manner. Yes, a lot of news headlines, including myself, talk about the entire average, but every single market is behaving differently, and this is why I put it together. So you can see on a whole aggregate, we're going to look at this box up here. This is talking about how prices actually went up 1.3% from last month. And this is very normal because in the months of May and June, usually a lot of larger detached homes will sell. We're talking your $2 million plus homes because this is the best time for people to look at properties. So when you have such a small amount of sales and you have larger amount of detached homes actually sell, it pushes up the average. And historically speaking, May and June has been over 50% of the time having one of the highest prices of the year. So I am not surprised that prices have actually gone up. Now, sales have actually also gone up in June, which is normal, and I expected that. So if hypothetically the worst of the uncertainty and the fear is behind us, and I do think it is, and I'll show you later in the chart, sales should be increasing. Are they going to go back to that historic average that I was showing you on the orange line? No, I don't think so. Because you can see right now, as sales are increasing, the number of new listings are increasing at a faster pace, meaning that we're getting 15% more new listings opposed to 11% more sales, which tells you that the months of inventory, the MOI over here, should be increasing. So it went up by 1%, meaning that the entire market is at 5 months of inventory, or the entire market every single month, 1 in 5 properties will sell, or a 20% chance. Now here's kind of the crazy thing. Right now, we're at 31 active listings, which I'll show you later in a graph of how high that actually is. And despite it being so high, it's actually rather shocking even to me who looks at data all the time, every single month, that prices are still this high. And my thinking is that there's a lot of crap inventory out there that is not priced to sell and it's just gonna linger around. And I am seeing it right now. Now, as for how the rest of the market is looking right now on a micro side, you can see I've broken up into Toronto proper, and then we're looking at detached homes, semis, towns, and condos. Obviously, I've always had your average price, and this is the change from last month. So green obviously meaning go up, and red meaning go down. And you can see that obviously prices for condos are coming down right now, and the detached sector is going up. Now, the important metric and which direction prices are headed is always going to be months of inventory, and I've always said that. So if you are in sub 4, it's green. Over here, as you can see, the probability of prices going up is high. So you can see over here for detached and semis in Toronto, prices did go up last month, which is very normal and seasonal. And you can see that it will likely continue going up because there's not much inventory, because the months of inventory is very low. Now for towns, Toronto's a little bit weird for towns, but you can see over here, we're in a balanced market, which is the yellow box over here. And it means that prices generally should stay steady and they shouldn't be going up or down. And anything over 6, which is in red over here, you can see that will be in a buyer's market. And you can see right now that the months of inventory is continually increasing, which means that it's going deeper and deeper into a buyer's market, which is why a lot of people are saying, hey, you know, how much more room do condos have for prices to go down? I'm saying, yeah, there's a probability depending on the inventory of that particular building. Now, I've done the exact same thing for the suburbs. So the 905, this includes your Halton, Peel, York, and Durham. And it's the exact same thing, but the months of inventory is a little bit different. So your detached is in a fairly balanced market right now. Your semis and your towns are in a little bit better shape right now, even though the prices are still continually coming down. And same thing, the 905 condos are performing very poorly, and they're actually performing worse off than the Toronto condos. So if you want to take a snapshot of this and just kind of look at what your home or condo is to understand where the direction of prices are going, just look at this chart and look at the months of inventory and the month over month change to see which direction it's heading. Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, but decades of experience to work for you. And you can see in this chart here, which is the average price for all of Toronto, you can see that it is strange that with so much inventory, prices are continually going up. It's very marginally going up, and I would not be surprised if we see prices come down in the next few months. And you can see it's actually the norm, because after June, usually prices fall off in this little box over here until September comes around. So the question really becomes just how high is the September, October month price is going to be, because we're going to have that dip in the summer, but how much inventory is going to be and what's the economy looking like in the fall to see whether prices are going to continually coming down in this direction over here, or maybe they stay flat in this direction. Because one of the interesting things when I always look at these stats is you have to understand that they are always 30 days behind. So when we talk about anecdotal stories or what's happening boots on the ground when we're trading with our team day to day to see what's happening, we see that firsthand what is happening. And we were not surprised that active listings continue to go up, because a lot of people are still asking about whether they should sell or not. But one of the weird things I've noticed is that when the market turns, it turns rather fast, meaning it's like everybody moves from one side of the ship to the other rather quickly. And a lot of that has to do with the sentiment and how the jobs are looking like and whether the interest rates are going to have a cut or not in July and September. And I don't know where that's going to be, because you have a lot of economists saying that we're going to get 2 more rate cuts, which I don't think it's going to affect the market. But at the same time, just how much inventory is going to be delisted in the summertime relative to how many buyers come back in the fall. And that's just a thing that we don't know right now. But you can see in this chart, the important thing is that this white line is so on its own outside of the norm, because we have never hit 31,000 active listings or unsold listings in basically 25-year plus. It's that bad. So a lot of this stuff right now is sitting in the market and it's competition with one another. And that's why I was saying there should be pressure for prices to come down, especially if you're in the condo space. Now, the other thing that is getting a little bit more alarming for me when I'm looking at this and talking to a lot of clients, how to transact in the real estate market, is that we are seeing a lot of new listings come up. We are also getting a lot more people calling about selling, which tells me that I would not be surprised if we continue to see the new listings go up as well. And if sales don't increase and pick up, the months of inventory increases, which means there's more pricing pressure. If you're a seller right now and you need to sell, you basically have to undercut everybody, and waiting around is not going to be better. You can't wait around hoping that the Bank of Canada's interest rate cut in maybe July, maybe September is going to move the needle, because it won't, and maybe hope that the fall market's going to be better, because clearly we don't know. There's too much uncertainty with the world right now. And you can see over here in the month of May, there is now a little big gap between where most of the Mays have clustered around in the last 7 years. In last month, we just kind of crossed around the 2020 mark over here, where I was like, you know what? We've hit that number before. But now that we are here, we have not. So we could be going in a different direction where new listings could potentially look like the active listings, and then we're in a lot of trouble. Now, as for months of inventory, which is the summary of all of it, you can see we are basically at 5 months. We were at this point last year in the fall. And would I be surprised if we saw something similar in this line, this blue line where we went up, it goes over here? No, I would not be surprised, because if more and more people are selling and the sentiment hasn't turned yet and we aren't getting rate cuts yet, I don't think the sales are going to increase, which means that the months of inventory may start getting closer to 6 for the entire market. Now, historically speaking, let's look at how May has fared compared to the other years. And you can see that, just tons of listings, like 31,000, like we said. We haven't had that ever. So I can use this chart and say, hey, this is the most amount of unsold properties we've ever had in May, going all the way back to 96, which is absolutely true. It's actually pretty wild. And if you look at sales, it's really, really bad. We have to go all the way back into the 90s, or that 1 year during the pandemic where we had very little sales. And then when we talk about new listings, again, now we're getting larger and larger and further away from the actual average. And this is what I was showing you in this chart. I would not be surprised if things start going this direction, which means that we're going to have even more unsold properties on the market. And when you look at months of inventory, again, it's just going to look really, really weird because we have not been sitting around 5 months of inventory in the springtime in basically forever. Last year was really, really soft at 3. This year, we're at 5. And if you understand this months of inventory chart over here, you can see that generally anything below 4 over here, prices should be going up. So the lower the number, the more prices are going up. But now we're past the 4, so prices should not be going up. That's why it was a little bit strange to see the price go up in May and June. This is why it's quite shocking to see prices actually go up, but there is a reason behind it. But as we stay hovering in this balanced market, which is the 4 to 6 range, I would not be surprised if prices stay flat or maybe even come down a little bit when you take out the seasonality. So just be prepared for that for the next few months because summer months tend to be much slower. Now, there is a little bit of a saving grace where the real estate confidence index has actually peaked back up. So maybe the worst of the confidence is behind us. And it's very similar to the percentage of sale as a population. It's really, really low right now, and it may bounce back up based on the confidence index as well. So can we potentially go back up to say maybe where we were last year? Potentially, maybe a little bit higher if there's pent-up demand, maybe. But that doesn't mean prices are going to go up. It just means that maybe more sales will happen if we get the rate cuts and the trade war talks are behind us. And one of the things that you have to remember is people buy based on their monthly payment, and affordability has been getting better. So the worst of it really was in 2022 on average, where you can see that the monthly cost for the mortgage was $3,500. Right now we're above $2,500, call it 26. So now we are basically going back to where the pandemic levels were when rates were really, really low. And while prices were still high, the rates brought the monthly cost lower. And if prices continue falling or staying flat while rates come down, I foresee that this line can come down some more, which tells me that if the confidence is coming back, if sales are coming back as a percentage of the population, again, above historic lows, and affordability is becoming better from historic highs, I would not be surprised if we see more sales in the coming months in the fall. But again, it doesn't mean that prices are going to go up. It just means that the market may not be as slow in the terms of sales. And if you're wondering where a lot of our clients are transacting right now, it's they are selling their condo and moving into a freehold home. And the reason for that, as you can see, they do not believe that the prices of condos are going to be increasing anymore, but they can clearly see the writing on the wall that the freehold spaces, especially in Toronto and sometimes in the GTA, the suburbs, the prices aren't going to be dropping anymore. So the price gap right now is the smallest it's ever been, and making that move makes sense right now. So if you want to understand the math of that, make sure you click on the video that's on the screen, and I'll see you in that video. Until next time, your move, your future. See ya.